everybody, welcome back to another weekly market review for F45Trading.com. This week we are discussing May the 17th to Friday, May the 21st. So right off the hop, let's get into it. Welcome back, of course. And as always, let's start out with the economic calendar, see what we've got on the week. Relatively quiet to start the week out, Monday and Tuesday. So far, Tuesday is void of any news, and I'll just encourage you to go to another Forex economic calendar. I shouldn't say Forex, but another economic calendar source as well, too, just to make sure that indeed Tuesday, because these guys at Forex Factory have been wrong before and have thrown stuff in at the last minute. That kind of jars markets a little bit. So just be careful on that, but double check your sources. Monday quiet with an Aussie monetary policy meeting minutes. Nothing Tuesday. A lot of medium impact news events for Wednesday. Expect Aussie to really move on Wednesday evening. Watch for that. And we do have FOMC meeting minutes on Wednesday as well too, which will probably move the markets slightly on Wednesday. So just be careful of that one. Going into Thursday, more medium impact news events. We've got Fed Philly manufacturing. We've got Lagarde speaking and unemployment claims for the US dollar. And then on Friday, we've got a whole bunch of news that starts very early in London Open with the GBP and goes right into Euro news, more GBP news, following up with some Canadian dollar news and US flash manufacturing. So all in all, I would imagine it's going to be business as usual Monday, Tuesday, Wednesday morning, and then Wednesday afternoon we may see a little bit of volatility with this 2 p.m. news release, so watch for that. Thursday should be business as usual again, and then Friday we'll definitely get a little bit raucous with all the news coming out for the euro and the pound. So just be careful of that. Put that on your calendar and make sure you are aware. So going into the charts here, looking at the US dollar, we're just kind of stagnating, and I mentioned this to you guys before. Just to be careful in here, because if you look at the amount of time we have spent in this current price range over the past little while, you can see how long price spends time in here, or has spent time, I guess I should say, in the past 5 or 6 months or so. So, you know, we could stay in this little choppy range here for the next little while. Until we break out above this high here or break below this low, obviously, we're probably going to continue to consolidate. Now, I would assume that Wednesday will probably move price out of this range, whether it be higher or lower. If price is going to break lower, we've got to get through this range right there, those two small little candles right there. Once price breaks below there, then we should see a run below here and a target below here, and maybe even all the way down here towards the end of the week, which would be about the 89. What is the exact level here? 89.15 is pretty close to the exact low. So that could be the target if we run through these lows there. If we decide to push up, which we already had a chance last week, so I don't know what the likelihood of this rolling higher is going to be yet, and I'll talk about that in a second. But I think that we could see price at the very least push up into the 99.50, maybe the 99.60 area. Watch the low of that candle there from last Thursday's low. Whatever that comes in on your chart, mine comes in at about 90.55. And I would imagine we're probably going to push up there into Monday, maybe Tuesday, and then possibly see price roll over. I'm still favoring the downside. At the end of the day, you look what we're in a downtrend. Unless price decides to break these highs significantly, I think that downtrend is going to probably continue. So I'm looking to see if we can at least run these lows, and maybe this low here this week. So that is the target. If we break the 90.85, so my target last week to the upside, price came and was sitting in here Thursday made the high. Monday and Tuesday really didn't go anywhere, and Tuesday set the low. As Tuesday set the low, I was looking right up into here for the high to come in, and my high that I called from the onset of the week was 90.85, and we actually got about 4 pips better than that at 90.89. So I was pretty close to the exact high of the week. And then Friday had a big sell-off. So I'd like to see if we couldn't, or if price doesn't want to just shoot up into this range here, that 90.55 level, and then possibly do this. If we start cracking up into the daily range of Thursday, then, excuse me, just be careful because they could make another run higher. I don't know how likely that is yet. And so what I was talking about earlier was, obviously, if you've been following the economy at all, you know that the more dollars in circulation, the more inflation starts to heat up. And I think what's going to happen, and because there's more dollars in the system, it means there's more lending. There's really low interest rates right now, of course. That encourages lending, encourages more money out into the system. And what tends to happen is you start to see inflation starting to kick in, and they're already starting to talk about that there at the Fed, and Yellen came out last 2 weeks ago and accidentally let it slip, saying that the Fed needs to tighten up its policy a little bit, and brace yourself for a possible interest rate hike. We'll see what happens. I mean, the economy is just teetering right now on a thumbtack, and I think if they jump the gun and raise rates too soon, then things could kind of come unglued even more so than what it is. So you definitely want to be careful. But I think longer term on the US dollar, I believe we're probably going to see prices maybe try to attack these lows here. Now, whether we get all the way down there, excuse me, all the way down under here, nice little range of lows under here, where I'd love it if they could get all the way down there, but realistically, that's a very long ways away. And that was traded down there in 2013. It's not going to be a straight shot down there. If it even gets down there at all. All I'm looking for is to find out if we run this low and this low, and if we do, then we can kind of see how things equate from there, because then we got this huge range back into here to contend with. But I think for the interim, as long as they continue to keep rates low and not raise the rates, I think we're probably going to see a continuation to the downside in the dollar. But again, as soon they're already hinting at it, so I think an interest rate raise is right around the corner. Whether they do it this year or if they save it for the fourth quarter like they usually do, we'll have to wait and see what happens. But I think for at least the summer, at least for the next 2-3 months, I think we're probably going to see a continuation to the downside on the dollar. Okay, so watch this level here this week. I think we're probably going to, it's probably going to be sensitive, and we'll probably see price fall to the downside from there. If not, though, I'm looking for price to run above the high from Thursday, and then maybe possibly get up into here if they want to do a deeper retracement off of this run. So we'll just have to kind of wait and see. EurUsd had the exact same reaction off of those levels. Price sold off, made a high on Tuesday, sold off Wednesday, sold off Thursday, jammed down into this consolidation range, and Friday had a nice up day. Looking for the same thing. Going to keep this short and sweet for you guys. Like to see price come down, rebalance off of the highs from last Thursday, and then possibly make a punch up. I'm looking for about 22.40 on the week. Now, last week was, I still got that range up there. I was hoping we would have seen a continuation higher when price was consolidating here, but after we hit that Tuesday high, kind of got a little bit suspect as price was selling off and closed lower than the open of Monday. So that was kind of a telltale sign that we would see lower prices for the week, and sure enough. So I'm still holding out for 122.40 for the week. So we'll see what kind of a run we get. If we get a bounce down into there, that could be a nice little 120 to 150 pip trade for EurUsd. We'll see if we get that. GBP, again, beautiful reaction off of these old highs in here. And so far, though, it hasn't made as much of an attempt to get higher as Euro has. So we'll kind of have to see that this, I think that would be an easy shot up to the 142.40 level that I have up here. This old high, I believe that it's going to be an easy run to get above there. And then if we get above here, and look how close we are to these old highs here. I don't think they're just going to come up into here just to have price fall all the way down. I think they're going to take that high in there. And who knows, maybe they might even want to try to get above this high and back into this range. I don't know what's going to happen there, but we'll have to wait and see there. But nonetheless, I definitely think we're going to have, I'll adjust this. I definitely think we're going to have the 141.65, these old highs from last week, taken out, and possibly a run up into here. So that's what I'm looking for. The high on the week that I was looking for, pardon me, the high on Friday actually I was looking for was 141.10. The price got exactly that. And you look at the bottom of my screen, 140.10.2. That was a call that I made on Friday for my members, just to kind of give you an idea of the accuracy that we see over here at F45 trading. It doesn't always happen that way, but a lot of times I do get the exact highs and lows of the days. So I'm thinking here again this week, we had price rebalance back down to those old highs here on Thursday, and then Friday started to kick to the upside. So we're probably going to see price stay bullish. We could see a little bit of a slide. You know, I mean, at the end of the day, I don't think I'd like to see price go below here. So whatever that is on your chart, I'd like to see them stay bullish. Honestly, I'd like to see them stay above this level here, the 140.75 level, and then just keep punching higher. But the markets are just opening up this week, so we'll see what happens. Just be careful. If we lose this low, then price could want to come up and trade all the way back down into this little consolidation range down here. So just be careful of that. But ultimately, I think there's a very good chance we're probably going to see this thing continue to pop higher. Aussie has got that, if you'll recall, I mentioned on Monday evening, we've got a monetary policy meeting minutes for Aussie, and then we have employment change numbers for Aussie. So I'll be honest with you folks, I don't know exactly what's going to happen with Aussie. Like Euro and like cable and like US dollar, watch the high here from last Thursday to see if there's any sensitivity. We could sink down into this range just a little bit. What I don't want to see them do is try to sweep these lows. If it does, then we might try to get back into this consolidation level. I don't want to see that. I'd rather see this thing stay bullish. Again, those monetary policy meeting minutes, it could cause the Aussie to sort of run sideways for a little bit. And the only reason I'm not super stoked on Aussie is just because we took this old high out right here. And to me, we had a nice bullish reaction, and then price really fell back into this range. And again, I'll counsel you to just have a look. I mean, look how much time price is spent in here. Who's to say price isn't just going to bang around in here for the next 3-4 days, for the rest of the week? You know, we don't know what's going to happen. So just be careful on Aussie. I would assume a bit of a reaction at this high rate here. Whether or not we get back up above this high here, I don't know. We're going to have to kind of wait and see until unemployment numbers come out this week. With the US dollar last week, so just as a heads up, these were those numbers. Those were those unemployment numbers that came out last week, and it really jarred the US dollar. So I'd be very hesitant to be trading Aussie until the release of those numbers, and just to kind of keep yourself protected. You don't want to be trapped in some kind of volatile range and you know, on the wrong side. So just be careful on Aussie. I wouldn't be doing a lot with them until after the economic employment change and unemployment rates on Wednesday. Could be overly cautious, but better safe than sorry. UsCad going nowhere. We hit that old low from way back when. When was that actually? 2017, I believe. Yep. September 1st, excuse me, September 1st, 2017, it hit this low, multi-year low, and expanded off. We just came down through it here, ran it by about 15 pips, and so far has rejected. Wasn't a steep rejection like this one, but nonetheless, look at the area, right, where price has come in, exactly what we've done. We came down to the same area in here, and price rejected very strongly in this area, came down again, price rejected very strongly, failed to get that low, and then just ran straight up. So now this is a pretty steep decline, of course, so this could be different, but to be honest with you, I don't know what UsCad is going to do, because it did hit that old low down here where US dollar wasn't doing anything like that. Euro didn't make any new highs, cable didn't make any new highs. Aussie, you know, certainly we did an old high, but or a new high, but just took out an old high from March, so nothing significant. You know, these are the similar highs from 2017, similar lows on UsCad from 2017. You can see UsCad just ran those out. Aussie has not, and I'm not going to go back through the other pairs, but you can do your own research there. So the million-dollar question is this a reversal? Is price going to fail to go lower, and we're going to see higher prices on UsCad temporarily, long-term? I don't know. All I'm suggesting is maybe just hold off on any ideas on UsCad for now. I'm kind of siding with this thing is going to run bullish. And here's the thing, if US dollar is bearish, UsCad should be bearish as well. I'm not getting that sentiment with UsCad, other than, yes, it is bearish, certainly, because we did take out an old multi-year low, of course. But I mean, going forward in this price action in here, this doesn't look super bearish. This looks like a reversal to me. Could be wrong. We're going to have to wait and see. But again, like Aussie, maybe just hold off on UsCad. Focus in on Euro and cable, and maybe, you know, see if you can't pick up a few pips there this week. Crude oil is a little bit messy. It was definitely off to a nice run in here, and then the last 4 or 5 days really failed to make any headway. And to be honest with you, I'm going to hold off talking about crude oil until it does something in here, because there's not a lot. I would expect price to roll over and come back down. Watch this level here. This is critical. But I would assume that we're probably going to run down to the 63.80 level, and then from there, I think we could possibly bounce again. I'm waiting to see if this level holds any support. So just mark that on your charts and just see if price does come down there, and see what the reaction is. I'm hoping it has a nice reaction. We get above these old daily highs in here, but we'll have to wait and see. And of course, last but not least, the metals. Very, very bullish on gold, and this again is kind of leading me to believe that the US dollar is probably going to make another run lower. Let me get rid of these guys here, don't need that. So last week we had these old highs in here. We had the target, just got in there, up there on Friday. You can see the candle pushing up into there, and now opening here for Sunday, we're well above that. So after a short run down in last Thursday, we saw a nice rejection from that area, and I'm still holding out that 1875 is going to get traded to. I just would like to see if we could come back down. Well, you know, to be honest with you, we're probably just going to straight shoot up into here. If we do get a retracement, I don't want to see them go below this level here. So if you are trading gold and you did get long, I wouldn't let price go below 1840. So it's at 1851 right now. You can wait and see how Monday develops, see if Tuesday gives you any sort of a retracement lower. And if we bank back into these highs in here, we could possibly get another bounce higher and look for that 1875 level. So that might be an option for gold, but very, very bullish. Nice to see gold finally doing something. But again, be careful on the gold market, folks, because we do have some big, massive equal lows there. And they also coincide with some big, massive equal lows over here. And I just kind of feel like they're leaving those for a reason if they're going to come back down for it. I've mentioned that before, and you know, I've mentioned those lows under here when price was trading down here, and we came down once, twice, and failed to get below those lows. So I think eventually they're going to do it, but nonetheless, we're well away from there right now. Wouldn't be too concerned about it. I'd be setting my sights at 1875 for the week to see if we can get up into here, and away we go. So that's all I've got for you guys. Good luck this week. I hope you have a very profitable week, as we did last week. And if you want to check out some of our membership options, jump on to F45trading.com. I got a new special out for a one-time only lifetime membership for $250, one time only. So if you guys want to take advantage of that, get into our trade room, get into our chat room, get live market analysis and signals and trades and setups all week long, then go ahead and check us out at F45trading.com. Love to have you in there. Thanks for watching, and of course, all my members, I will see you in the chat room, New York Open Monday morning. Until then, thanks for watching.